Welcome to Smart Stock Watch. Today is September 4th, 2025, and we're diving into the latest earnings report from Caleres, a leading portfolio of consumer-driven footwear brands. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Caleres' performance this quarter.
Let's get started with an overview of the report. Caleres has just released their second quarter 2025 results. What are the key highlights?
Caleres reported consolidated sales of $658.5 million, which is a 3.6% decrease compared to the previous year. Despite the decline in sales, they achieved structural cost savings expected to generate annualized savings of $15 million. Additionally, they reported an adjusted earnings per share of 35 cents, which includes a discrete tax benefit of 0.7.
Revenue and profitability overview. Let's start with the top line. Caleres reported net sales of $658.5 million for the second quarter of 2025, which is a 3.6% decrease compared to last year. John, can you shed some light on this?
Absolutely. The decline in sales was primarily driven by a 4.9% decrease in the famous footwear segment and a 3.5% decline in the brand portfolio segment. However, it's important to note that direct-to-consumer sales represented approximately 75% of total net sales, which is a positive sign for the company's strategic focus.
And what about profitability?
Caleres reported a gross margin of 43.4%, which is down 210 basis points year over year. This decline reflects tariff-related costs, selective promotions, and higher provisions for inventory markdowns. Despite these challenges, the company achieved net earnings of $6.7 million.
EPS forecast and analyst expectations. John, analysts were forecasting an EPS of 50 cents based on a survey of 2 analysts. How did Caleres perform in comparison to these expectations?
Caleres reported an adjusted EPS of 35 cents, which fell short of the forecasted 50 cents. The adjusted EPS includes a discrete tax benefit of 7 cents. While the company did not meet analyst expectations, they have demonstrated resilience in a challenging market environment.
What factors contributed to this discrepancy?
The discrepancy can be attributed to the decline in sales and gross margin pressures. However, the company's focus on cost savings and strategic initiatives, such as the acquisition of Stuart Weitzman, are expected to support future growth.
Strategic initiatives and future outlook. Caleres has been active in strategic initiatives. Can you tell us more about their recent moves and future outlook?
Certainly. Caleres completed the acquisition of Stuart Weitzman, which adds a new lead brand to their portfolio. This aligns with their strategic focus on premium, direct-to-consumer, and international business. Additionally, they achieved structural cost savings expected to generate $15 million annually.
What about their financial flexibility?
Caleres enhanced their financial flexibility by entering into an amended credit agreement, extending the maturity date of their asset-based revolving credit facility and increasing their borrowing capacity. This provides them with enhanced liquidity and flexibility to navigate the current market environment.
And what can we expect in terms of future guidance?
Given the uncertainty in the environment, Caleres has suspended their annual guidance. However, they remain focused on leveraging their capabilities across their portfolio and executing their strategic plan to drive sustained value for shareholders.
Key takeaways. As we wrap up, let's summarize Caleres' performance this quarter. Despite facing headwinds, the company has shown resilience with net sales of $658.5 million and an adjusted EPS of 35 cents. They have completed the acquisition of Stuart Weitzman and achieved significant cost savings.
Indeed, while they missed the EPS forecast, their strategic initiatives and enhanced financial flexibility position them well for future growth. Investors should keep an eye on their ability to execute their strategic plan and navigate the challenging market environment.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Caleres' performance in the comments below.